Hello everyone. In previous lecture, we have seen the study on cash flow statement, and we have seen that how we can prepare cash flow statement from case, right? And again, today what we will do, we will discuss another case study, and we will discuss more transactions related to cash flow statement. Here you can see question is given. I will read the question. After that, we will solve this question carefully. So see. Okay. From the following balance sheet of JN Limited as on 31st March 2010 and 11, prepare a cash flow statement. So date is given 31st March 2000 and another date is given 31st March 2011. You have to see this time they have given earlier previous year date first, and after that they are giving current year date, right? And if equity and liability is given, then assets are given, that is current assets and non-current assets are given. Now for short-term provisions, they have given note, right? And for also fixed assets, they have given you the note, right? So what note they have given here? Short-term provisions, there are two items. One is provision for taxation and second is proposed dividend. And in fixed assets, there are two items, that is tangible asset and intangible asset, that is patents. And after that, additional information is given. During the year, building having a book value of rupees 25,000 was sold at a loss of 8,000 rupees. And depreciation on the depreciation charge of the building is 20,000 rupees. Now, what we have to do, we have to prepare a cash flow statement by using this data, right? Now, before proceeding to the cash flow statement, I would like to discuss something about this because notes are very important here, right? Now, if you see here, note to account is given. And in note to account, short-term provisions are given, right? In short-term provision for taxation is given and proposed dividend is given, right? Now, if I talk about provision for taxation, right? So what comes done in year 2010, company has created provision for taxation. It means this company has to pay, right? Usually, if you see how companies, they pay tax to the government, I will draw the statement for you, so it will give you better clarity, right? So first I will draw the statement. In detail, we will understand this question. So if you see here, let's suppose this is financial year 1st April 2009 to 31st March 2010, right? Here what company will do, company will prepare their financial statement, P&L account, balance sheet, etc., right? And company will calculate their profits, right? Company will calculate their profits. This is a profit before tax, right? And with the help of this profit before tax, what company will do, company can calculate their tax liability, right? Here, when company will prepare their final P&L account on 30th March 2010, they don't know about the tax liability, what actual tax they have to pay, but they make an estimate. They create provision for taxation. We say it as a provision for taxation, but in P&L account we only show taxation, right? So let's suppose company has earned profit of 1,000 crore rupees. Company has to pay 300 crore tax government. So what company will do on 31st March 2010, company will create provision, and when actually company will pay the tax for this year, company will pay the tax for this year on September month, company will pay the tax, right? So every year a company follow the same process. So 31st March 2011, what company do, company will prepare their P&L account, balance sheet, etc., and they will create a provision for taxation, right? And when company will pay the this provision for taxation, company will pay this provision for taxation in September month every year, right? In September month, here what company will do, company will pay the taxes, right? So here what company has done, for year 2000, company has created provision of 60,000. Now when company will pay this 60,000 rupees to the government, company will 60,000 to the government in September month, right? In September 2011 10 company will pay the tax. Similarly, here also company has created provision for this year, that is 10 to how much? 1,05,000. 1,05,000 provision company has created. When company will this 1,05,000, company will pay this 1,05,000 to the government in September month, right? So this tax liability will be 60,000, which company will pay in current year. So this is what a funda behind provision for taxation. Now we will see how we have to provide the adjustment. Similarly, if I talk about proposed dividend, every year what company do, company propose dividend for their shareholders, right? So here what directors will do, directors will propose the dividend. So let's suppose I'm taking example of 1st April 2009 till 31st March 2010, right? For this year, what company has done, proposed a dividend. Right? For this year, what company has done, company has proposed a dividend. Right? Company has proposed a dividend. Of how much? Company has proposed a dividend of 1,20,000 rupees. What company will do? Company will pay this dividend when there will be general meeting of shareholders. So on generally general meeting takes place till 30th September, right? So basically shareholders, they will approve this proposed dividend, and at that time there will be cash outflow. So when company will be paying this dividend, company will be paying this dividend on 30th September. Similarly for this year, what company will do, company directors will, they will propose the dividend. And how company will pay the dividend? Company will pay the dividend once it is approved by shareholders. So for this year, company has proposed dividend of 90,000 rupees. When company will pay, company will pay when it will get approved by shareholders in next year, September. Right? Till 30th September, company will pay the dividend. This is what process company follow. Now you might be thinking that what is the of this data? This data will be used in cash flow statement, right? So we will see how this data is used. First, we will discuss about operating activity, right? So this question is quite different from previous question. So we will prepare operating activity first. Operating activity. Now in operating activity, if you see, so first line item which we will record here, it is profit before tax. Now you just let me know, is it possible to find out the profit before tax? So we will follow the same method. We will follow the same method. So here if you see reserve and surplus is given, right? Reserve and surplus, that is balance in the statement of profit account. So in year 2010, balance was how much? It is 1,50,000. Now new balance is how much? It is lakh rupees. So you can see what company has done after payment of dividend. Company has transferred balance, right? That is there is increase by how much? 1,50,000. So in here, what company has done? Company has earned profit of how much? 1,50,000 rupees, right? So if I want to calculate profit before tax, so what I will do, I will take previous year profit, that is opening profit, how much? 50,000, and closing profit is how much? 3 lakh. So here I have to prepare what I will, instead of writing it directly here, what I will do, I will prepare a working note. Right? I will write it down here. Working note number 1. So it will be easy for you to understand from working note. Right? So I will do the working note here. So if I want to calculate profit before tax, I'm calculating here PBT. Okay? This is working note 1. This is working note 1 PBT. Now, if you see, closing balance of reserve is given. Closing balance of reserve is how much? 3 lakh rupees. Okay? It is 3 lakh rupees. We will reduce opening balance reserve. It is 1,50,000. Now, what is the remaining amount? Remaining amount is 1,50,000. Right? What we do, we transfer profit after tax, right? And we also do dividend if company has any company has paid any dividend. And this balance, what we do, we transfer in reserve surplus account. So company has transferred profit after tax after deduction of dividend to the in reserve and surplus account. Now here we are having more information because we have to calculate PBT, and this balance is profit after tax after dividend which we have transferred. Now here if you see, dividend information is given. How much company has proposed in current year? So you can see here company has proposed dividend of 90,000 in current year, right? So it means company has adjusted this amount from profit, right? We have to find out profit before, but we are having the balance of profit after tax after dividend. So to find out profit before tax, what to do? We have to add back dividend, which we have reduced previously, right? Similarly, if you see, company has created for taxation. How much? 1,05,000 in this year. So we have to add back these balance to find out the actual cash, actual profit before tax. So here, what I will do, I will add dividend amount and tax amount, right? So dividend amount being it is 90,000 and tax amount is 1,05,000. So from this question we will be able to calculate the PBT, right? So here it is 1,50,000 plus 9,000 plus 1,05,000. So total PBT amount is 3,45,000. This is the PBT balance. This is the PBT balance. See, total PBT balance is 3,45,000. Right? We have calculated the PBT now. I will write it down here. So PBT balance is 3,45,000. Then after we have to adjust non-cash transactions. So cash transactions and other transactions are there, which we will be adjusting. So we will add depreciation. We can see here company has charged depreciation how much? So in note it is given company has charged depreciation of 20,000 rupees, right? Depreciation is 20,000 and there is a loss of 8,000. So loss and depreciation we will be adjusting both of them. So depreciation is 20,000 plus loss on sale of asset. Loss on asset is 8,000, right? Loss on sale of asset is 8,000. Now further we have to see, is there any requirement of adjusting other transaction? So definitely here we have already provided the impact of dividend provision, tax and dividend. One more adjustment will be there. Right now what we have to do, we have to provide adjustment changes in working capital. We will be providing adjustment for changes in working capital. Okay. Sorry, just wait a minute. I'm trying to make it clear. That is the reason I'm underlining all these items. So very easy to understand. So operating activity, transactions we are recording right now. So now we have to record changes in capital. So changes in working capital basically means change in current asset and current liability. Now, if you see asset 2010 balance is given. So here current asset is increasing. Right? Current asset is increasing. So whenever there will be increase in current asset, so we have to do. So I will write down in format. So one, we have to add changes in capital when there is increase in current liability and whenever there is decrease in current asset. And when we will reduce this change in working capital whenever there will be decrease in current liability or whenever there will be increase in assets. Right? We have to reduce this amount. So we will see trade receivable is increasing from 382,500. So here we will reduce receivable, trade receivable. So it is 382,500 by 3 lakh. Right. So you can see here the balance is going to be 82,500. Now investment. If you see investment is also increasing. Sorry, it is increased. It is inventories, I'm sorry. So 15,000 to 22,500. So here I will write on inventories is increasing. So 22,500 to 15,000. So here it will be 7,500. Balance is going to be 7,500. Now cash and calendar, we don't have to provide any adjustment. Short-term borrowings, right? So there is a reduction in short-term borrowing, right? There decline in short-term borrowings. So it will be 3 lakh to 1,50,000, right? So we will reduce whenever there is decrease in current liability, we will reduce it. So short-term borrowings 3 lakh to 1,50,000, it is declining. So here balance is going to be 50,000. These balances will be negative balances. Then if you see further, trade payables are also doing. It means there is a cash outflow. So no balance, we have to add here. All the balances we have to reduce. So what I will do, I will delete this item, which we have done. So here, trade payable is given. That is 90,000 minus 67,500. So here balance is going to be 22,500. Right. Now further we will see what transactions we have to adjust here. So almost for operating activity, we have provided adjustment for all the transactions. Right. Now there is no transaction for increase in current liability or current assets. We will leave it blank. And now we will do the total here. Yeah. So we will do the total. It will be cash flow from operating activity before tax. Right. So I will do the total here. And let's see what is the total amount. So it will be 3,45,000 plus 20,000 plus 8,000 and minus 82,500 minus 7,500 minus 1,50,000 and 22,500. So this is the profit cash flow from operating activity before adjustment of tax. So this will be 1,10,500. 1,10,500. 1,10,500. Now we have to reduce taxes. So what tax amount company will be paying this year? So this will be the tax amount which we will be paying to the government. We have seen that 2010 tax will be paid in year 2011 and 11 tax will be paid in 2012, right? So in succeeding year we pay the tax. So this is the amount which company will pay to the government. So you can see what is the tax amount? 60,000. So here, what will be the balance? 1,10,500 minus 60,000 if I do. So I think it will be 40,500. Sorry, 50,500. 50,500. So cash flow from financing activity is how much? It is 50,500. Now, we have to discuss about investing activity. Right? We have to discuss about investing activity. We have calculated this balance. Now, cash flow from investing activity. So here, if there is any purchase acquisition of asset, those transactions we will be recording. So now we will see the asset. So non-current we will see here, right? So they have given separate this note for non-current. So we can see here. Actually, one more transaction we have to adjust. We forget to adjust transaction. No problem, we will do it. So if I talk about tangible assets, here you can see tangible asset value is how much? 9 lakh for year 2010 and 11 lakh for 2011. Right? Sorry, 9 lakh for both the year. 9 lakh for both the year. So what we have to do, we have to find out the net opening balance first, right? So opening balance of asset is how much? Opening balance of asset is 9 lakh. Opening balance of asset is given 9 lakh rupees, right? Now we have to use depreciation, which company has provided during the year. It is 20,000, right? Company added depreciation 20,000, and what company has done? Company has sold, right? So sale of building, we have to write it down here. So sale of building whose value is how much? 1,05,000. So these values we will be reducing because this is not adjusted yet, right? In current year they are reducing, so 5,000. So these values we will be reducing because this is not adjusted yet, right? In current they are reducing, so we will be reducing it from opening balance, and we will find out the net opening balance. Opening balance. So what is the total value of net opening balance? It will be 9 lakh minus 1,20,000. Sorry, 1,25,000 and minus 20,000. So here balance is 7,55,000, right? 7,55,000. Now if we want to find out the purchase, so how we can find out the purchase value? Closing balance of asset is 9 lakh rupees and opening balance of asset is 7,55,000. So in total, we can say company has acquired asset worth rupees 1,45,000. Right. So here I will write down the purchases. Purchase of asset. Tangible asset. 1,45,000. 45,000. Right. So here I will write down the purchases. Purchase of asset. Tangible asset. 1,45,000. 1,45,000. it's shown in negative. Then further we will see what company has done. Company has non-current investment. In opening balance of investment is 0. Closing balance is 1,12,500. So investment, there is a purchase of investment purchased. So there will be outflow of 1,12,500 rupees. So we will show as a negative balance. So one thing which we have forgotten to adjust is intangible asset. Now, if you see, opening balance of intangible asset is 75, and closing balance of intangible asset is how much? 62,500. It means company has done, if there is a reduction in balance of intangible asset, so it means company has written off their intangible asset. Right? It is very similar to depreciation. Right? Company has amortized their intangible asset. So we have seen now, along with depreciation, we will be adding amortization expenses also, because intangible asset is getting decreased, right? So 75,000, 62,500 you will do. That amount we have to adjust here, right? So what I will do, instead of changing all the values, I will write it down here, amortization expense, amortization of patent. And what is the value of amortization of patent? It was 7,000 it was 75,000 and current value is 62,500. So we have to add back amortization of intangible assets. So it will be 12,500. So how I have calculated this 12,500? Opening balance is 75,000 and current balance is 62,500. So it means company has written off their intangible assets, right? So what I will do, instead of adjusting all the values here, I will add 12,500. Right? So 50,500 plus 12,500 if I will do. So what value I will get? 12,500 plus 12,500. So here it is 63,000. Here value is 63,000. Now, if I calculate the flow from investing activity, so what will be the cash flow from investing activity? Cash flow from investing activity. So here the balance will be negative. So 1,45,000 plus 1,12,500, 1,45,000 plus 1,12,500. So that will be 2,57,500. 500. This is the balance, negative balance. Now we have to calculate financing activity balances. So here I will write down financing activity. See, these questions are lengthy, but you know how to prepare cash flow statement and everything, because at a time when you will do the analysis, so you should know each transactions and what effects these transactions are providing. So that is the reason we are doing big questions also. So now next point, if you see here, so we have to see financing activity and how financing activity, we will find out that what transactions belong to financing activity. So we have to see from where company is arranging finances, right? So if I talk about equity share capital, so here opening balance is 6 lakh and new balance is 9 lakh. So company has raised 3 lakh rupees from equity. And if I talk about current liability, we don't have to consider, right? We have already given the effect in operating activity. So only equity is given, then current assets we have already provided adjustment for all these line items. You have to see whether you are covering all the line items or not. So we have provided adjustment, except this cash, we have to provide the adjustment right now, not provided. Now, if you see, we have provided adjustment for short-term provisions for both the amounts, right? You might be saying how we have provided adjustment for both the amount. Here we have provided, right? We have provided adjustment for this amount. We have provided adjustment for this amount also. Now, in case of proposed dividend, we have provided adjustment for this amount. We have provided adjustment for this 90,000, but we have not provided adjustment for 1,20,000. So proposed dividend, I have told you, 2010 dividend will be paid in the 2011, right? So company is paying dividend. Company has proposed 1,20,000 and it will be paid in there. So now in financing activity, we will be showing the effect of 1,20,000 rupees. And if I talk about other transaction, we have provided adjustment for these all transactions. So only cash transaction, equity transaction, and this dividend transactions are remaining. So let's see. So Company has raised money from by share capital. So here I will write down share capital. Right? So opening balance was 6. Now current balance is 9 lakh. So it will be 9 lakh minus 6 lakh. So here we will be recording 3 lakh rupees. Right? And company is paying dividend. How much dividend? The dividend which is proposed in previous year, and it is 1 lakh 20. So here company will be paying this year 1 lakh 20,000 rupees. It is 20,000. So what will be the net balance or cash from financing activity? Cash flow from financing activity. It is 1,80,000. So now if I get the cash flow from all the activities, cash flow from activities is going to 63,000 minus 2,57,500 plus 1,80,000. So what will be the net effect? Net effect we will see is 1,80,000 plus 63,000 minus 257,500. So here there is a negative balance of 14,100. Right? Now we will see the opening balance of cash. So you find out the opening balance of cash. So you can see opening balance of cash is how much? 182,500 here. So there is a difference. I think we have not adjusted some points. So what I will do, I will check where we are making mistake, because opening and closing balance. Yeah, I have to check why there is a balance, because if you see here, opening balance of cash is 30,000 and our total balance. There will be difference here. Right? There will be difference. This balance will not match with the closing balance, that is 1,500. So we have to see which transaction we have not given effect cash flow statement. So we have given effect for equity share capital reserves, short-term borrowings, trade payable, short-term provisions, fixed asset, non-current investment, trade receivable, inventories, cash and cash equivalents, provided adjustment. We have provided adjustment for these. During the year, building having book 1 lakh. Okay, we have not provided adjustment for this line item. Company has sold asset whose value is 1,25,000 at a loss of 8,000. So we have not added this amount. There is a cash inflow in investing activity. Company is selling, so there is a cash inflow of 1,17,000. We have not adjusted this amount here. Now we will get the cancel. So here I have to write down sale of asset. Sale of asset whose book value is 1,25,000. I have only shown the effect of loss in operating, but I have not shown the whole in investing. So here there is a cash inflow of how much? It is 1,70,000. There will be change in cash flow from investing activity. So check it. So it will be 1,17,000 minus 1,45,000 minus 1,12,500. So it will be negative 1,40,500. 1,40,500. And if I do the total here, so there will be change in the value. So now it is 1,50,500. 1,40,500. So we will see here. So it will be 63,000 minus 1,40,500 plus 1,80,000. So here value is going to be 1,02,500. Yeah, I think now it is correct. Now we have to add opening balance of cash. So what is the opening balance of cash here? So opening balance of cash is 30,000. You can see opening balance of cash is 30,000 and closing balance of cash is 1,32,500. So if I add opening balance here, so my closing balance is going to be now same as per the balance sheet. Now our statement is absolutely correct. So it is 30,000. Sometimes it happens that you miss transaction. If you will recheck it now, so definitely you will get the correct answer. So it is 1,32,500. This amount you will be transferring in balance sheet. Right? So this is how we prepare cash flow statement. So hopefully you are able to understand that how we have calculated, how prepared cash flow statement, and how we have calculated closing balance. We will take few more cases. Thank you.